I just recorded a quick video and uploaded it explaining using different time frames. That's going to be for people in the premium group. I'm going to have that in Flux Trading Group. It's just a 2-minute, or in Flux University, all the way in the bottom within Flux Trading Group. If you're in the premium group, then you can access all the Flux Trading Group stuff on the bottom. So let me give you a quick, it's only a 2-minute video where I briefly explain it, but I explain it in more detail than I'll probably cover here. But really quick, so if you're looking at Bitcoin, we're overall expecting a reversal in the market on the hourly reset, right? So the 4-hour model is not necessarily done for. There's plenty of room for her to continue up. The hourly model is going to reset, and then we're going to potentially push up into the cloud like I've been talking about. We have to get above the 55 EMA right there. That's one of my key Ichima dynamic resistances, part of my Ichima model. Anybody in public or in the group, doesn't matter. I have plenty. If you search my channel for Ichima, ICHEMA, you'll see all the videos about my Ichima model and how to utilize it after you add it to the chart. You can see the indicator up here on the top left. Ichima Dynamics, that's my custom indicator. It's available to everybody, so you can search for it. But this is a mini example of what I was doing in that short video about time frames, where if you look at the hourly here, the hourly Stochh has fully reset, right? It's getting close to turning up and looking bullish. Is it going to turn right here? Well, there's 25 minutes left on this hourly candle. We already potentially had a reversal here right on the 55 EMA, right? So that's one of my key dynamic supports in my Ichima model. Again, amazing how well my Ichima dynamic supports work. We also have a little bit of an inverted head and shoulders. I have a video I just recorded on that as well, which I'll share publicly. That one's not just for Flux Trading Group, Flux University. That's for the public, that video, but enough about that now. So right now we're retracing. We have strong support from the dynamic supports here. If I then drop down, so if I'm looking at the hourly and I'm like, all right, we might turn soon, in 25 minutes we have the next hourly candle. If this one stays green, there's a really good chance we can get a big bounce. Then if I drop down to the 15-minute, I can see, all right, the 15 minutes a little high here, so it probably has to come back down a little bit. We don't have a very clean pattern here on the 15-minute, but you can see the up and the down and the up did correlate to an up, a down, and an up on the price. Even though the up was very small, it looks like we might hover around these lower levels for a minute, potentially come back down. We have the 222 EMA, which held perfectly here. And then we have the top of the cloud. So the 222, good support, top of the cloud and 222 together, really good support. So the 15-minute model is not that on point, so it's a little bit tougher. You could even drop down to the other time frames, although in this case, the 5 minutes all over the place, so it's pretty useless. In this particular case, I'd focus more on the hourly and the 4-hour. In the case of the 4-hour, we're getting kind of high on the Stochh, but that doesn't mean anything because the hourly is going to reset, and that's going to keep her bullish. The hourly really is the key. We have 20 minutes left on this candle. That's going to be a big deal. So if you were to enter right now, for instance, if I were to buy right here, my stop loss would go down here, maybe 1.6% below my entry. That way my stop loss, 1.75% below my entry. Pretty low risk, right? At worst, I can lose 1.75%, meaning if I put $1,000 into a trade, worst case scenario, I lose $1,750, right? $20 with the fees. So worst case scenario, I lose $20 out of $1,000, or $1.75 or $2 out of $100 trade. Potentially a very, very small loss. Pretty much insignificant, right? So by having a stop limit order that close, I'm protecting myself from losing. And if I'm right and we break up, I'm going to be in a great position with an entry right at the bottom. Problem is I don't know for sure if we're turning up bullish here. It looks pretty close. I might want to wait the next 22 minutes for this hourly candle to end, and then I may have more or less confidence depending on how it turns out. As long as it stays above the 55 EMA though, I will be bullish, because if she remains above the 55 EMA here on the hourly model, there's a really good chance we push up and continue this big wave 3. So I'm going to wait and see how that plays out a little bit more. Keep in mind, this whole overall correction was pretty small. Overall, it does look quite bullish. Just to further show you what I mentioned earlier, how we have this inverted head and shoulders, something like that, right? So we have the initial wave structure to have that first shoulder, the head, the next shoulder, right? So we have that neckline with a nice upwards trend line as well. And there's a high probability we get the reversal here, but I'm going to wait and see. 20 more minutes. If we start breaking up and pushing up, right? If we get up to here, like the 222 EMA, I'll probably just FOMO in at that point. The only issue is that at that point, I won't have a really low risk setup. Right now, I can buy, and my stop loss can go just 1.75% below my entry. If you can afford the extra risk, a good way to play this would, instead of taking 1.75%, you can maybe take 2.5%. That way, not only do you have the 55 and the 99 EMAs, there's also the top of the cloud. So if it were to go down a little bit more, you have 3 of my Ichima dynamic supports that could potentially cause her to bounce back up, and then your stop loss doesn't get hit. I'm considering doing that here. I think I might buy a little bit here, place my stop loss 2.5% below my entry. Again, very low risk. That means on a $1,000 trade, worst case scenario is you can lose 25 bucks. Not that much more than $1.75, right? So, or $17.50. It's still pretty close to 20 bucks. So I think it's worth it since the risk is relatively small. So I think what I'll do here is, I'm going to do it. I'm going to enter into Bitcoin here. Now, if I'm right, and we do get the reversal either on this candle in the next 20 minutes or the next hourly candle, which we'll get to in 20 minutes, if we get that reversal, we're going to see everything else go up. So if we were going to look at the hourly chart, again, I already entered a Matic trade, which the paid group knows about, but I haven't shared that publicly. On my Matic trade, the hourly was a little bit ahead of the curve. So she's already reset and turned bullish, and she started going up. Now she's dipping ever so slightly, but I think she's overall going to continue up. I think Matic is going to run up and pump pretty hard if I'm right about this Bitcoin correction. If we get this Bitcoin correction, we should see her move up aggressively. I'm expecting the same thing on ETH and LTC. LTC doesn't have quite the supports up here, but Ethereum does. If we look at Ethereum, you'll see, similar to what we have with Bitcoin, we don't have the top of the cloud, but we have the 222 EMA created the perfect bounce. So now if you were to enter similarly into Ethereum along with Bitcoin, you could buy here. Stop loss goes 2.5% below your entry, and it's below the 55 EMA and the 222 EMA. So the first red line here, then the yellow line. Now, 2.5 is not really enough. I'd probably want to go closer to 3 just to get a little extra space here. I don't want to take the extra risk. I might wait. I'm just going to get into the Bitcoin one first, and then I'll wait. And then if Ethereum dips just slightly and gets closer, I'll probably get in a little bit lower, closer to 2760. That way my stop loss can go just 2% even below my entry. I could put it right here, like 2% below my entry. And then I still have the protection of both of those EMAs, 2 of the Ichima dynamic supports. And again, just like with Bitcoin, in 18 minutes, this hourly candle ends, and it already looks like we're starting to turn. So I will summarize lastly by saying looking at different time frames is key, but more importantly, just because it looks like we're starting to turn doesn't mean shit, because the 15-minute candles do suggest that they're turning bearish, although we do have great support, just like we had on Bitcoin, on Ethereum. In this case, we got really close to the top of the cloud over here on the 15-minute chart, or the bottom rather. We could see the same thing here and get support pretty much where this last candle bounced. We might hover right around the mid-2750 range. We'll see what happens, but the 15-minute Stoke does suggest we might continue to dip a little bit here before we break out. The way it's working out, we might get this candle a little bit lower on the hourly, and then the first 15-minute candle of the next hour could start lower. So it's probably better to wait to enter stuff, but I'm going to enter in just to the Bitcoin trade for now, and then I'll decide about ETH, LTC, and the others. And again, obviously I'm already in this Matic trade, got the initial breakout right here. I got in after this bottom, right? So I got in down close to this bottom, and then we started running up, and we got a nice little bounce up, and now we're coming down slightly. But I'm waiting for this 15-minute to reset. There's 2 minutes on this 15-minute candle, and I think there's a high probability we stay above the 222 EMA here, and then start that aggressive move up. And we need Bitcoin to do the same, but I'm thinking Matic is going to be one of the assets that does perform exceptionally well if I'm right, and we do indeed get that reversal on Bitcoin. OMG, given how bullish she has been and the fact that she's still holding this bullish, I think she's going to push up really hard. If Bitcoin gets the reversal, you can see the Stoke is already turning bullish. I think it's probably worth getting into OMG now as a mid to long-term hold. I don't have a low risk setup on her. So right here, I don't have a really good support structure below where I can place my stop loss. But what I can do is I can enter it into it as a mid to long-term hold where I have a much higher potential profit. And in that case, I'm willing to take a little bit more risk because the profit is so much higher and I can put less money into it. If I'm right and the hourly is reversing, we're going to stay above. So I can do a short-term trade on OMG. You know what? I'll do that too. So I'm going to enter into Bitcoin, and then I'm going to enter a smaller short-term trade on OMG where my stop loss is tight. It's going to be 2.75% below my entry. And then I'm also going to get into another OMG position that's more of a mid to long-term hold. It's going to be a much smaller bag. I'm not investing as much, but I'm also not using a stop loss at first. So there's more risk, because if it dumps, I could take a larger percentage loss, but I'm putting much fewer dollars into it, so overall my risk is great. I'm going to stop this now because I want to enter into OMG and Bitcoin short-term trades right away. I don't want them to start bouncing up and then I miss out. So I'm going to enter those right now, and then I'll do another update in a bit, especially if we end up coming down a little bit more, and then I can fill my bags lower. If we start bouncing, it's going to be an aggressive pump across the board. The whole market turns green. So watch for that. It's all going to come down to what happens with this and the next hourly candle on Bitcoin.